So for this quarterly video, let's start off the conversation with everybody's favorite topic, the US election. According to our macroeconomic research provider, BCA Research, their opinion polls of retail investors and institutional investors suggest that Trump and the Republicans are favored to win in 2024. Now, if you look back at history, it would suggest that unless there's an economic recession, the incumbent party has the higher probability of actually winning the election. The bottom line is that we cannot control the outcome of an election, but we can prepare. And part of this preparation is focusing on the consumer and industrial activity in the US. First, the consumer is the lifeblood of the US economy, making up more than 65% of GDP. Second, the manufacturing cycle is showing signs of restarting. The desire to secure supply chains and rehome certain manufacturing facilities is supportive of investment and economic activity. To express these views, we have investments in companies like Mastercard, Applied Materials, and Fastenal and Co. Now, if we switch gears to inflation, the trend over the last 18 months has been encouraging. Inflation, however, has not been beaten. Strong wage growth and a low savings rate in the US are supportive of consumption and economic activity. However, these factors are also supportive of an inflation rate above the 2% in the near term. From an investment perspective, this heightened level of economic activity is excellent for earnings growth. And in anticipation of this earnings growth, market valuations have expanded in recent months. More companies have participated in this market rally, however, since October of 2023 than we have seen in the past. Market returns for the first 9 months of 2023 were highly concentrated to a handful of stocks, often called the Magnificent Seven. This market concentration is an area of risk for investors. And by investing in a diversified basket of securities, the Matco Global Equity Fund has been able to manage this concentration risk and benefit from the market breadth improvement in the last 6 months. Now, investors must navigate a path that isn't always as straightforward as they might like. Intra-year declines, or the percentage change from a market peak to a market trough over the last 43 years, has averaged a little over 14% in the US. Despite these declines, the annual returns in the US have been positive 33 of the 44 years. I bring this up because of the amount of money sitting on the sidelines today. Money market funds, assets under management, have hit another all-time high. And given the strong equity returns in the last year and a half, these investors will begin to experience the fear of missing out, or FOMO. This money on the sidelines is a source of support for equity prices during the next inter-year decline. The Matco Global Equity Fund delivered once again in the first quarter of 2024. Our Series F of the fund has produced a compelling 10.7% return in the last 3 months. And looking longer term, the fund has returned 21.6% over the last year and an annual return of 10.2% over the last 5 years. For investors looking for exposure outside of Canada, where their desired investments are something with growth potential and at a reasonable price or valuation, the Matco Global Equity Fund is a worthy consideration. Currently, our regional exposure is as follows. In the US, 62%, in Europe, 17%, emerging markets, 9%, Japan, about 6%, and Canada, about 5%.